Welcome to the Health Daily Show. I'm your host, Chitra Nabat. Joining us today is Michael Yang, Managing Partner, OMERS Ventures. Michael, thank you for joining us.
Thank you, Chitra, for having me. Thank you, Health, for having me.
Michael, tell us about OMERS Ventures and what's unique and different about your firm and investing approach.
Sure. OMERS Ventures is a venture fund that's been around since 2011. We're a global venture fund with an investment team that's in London, Toronto, and the US and the Bay Area. So we focus on North America and Europe. And one of the major areas that we have long-held beliefs can produce great investment returns is health tech or digital health. I lead a team of 3 investors in the US that focus on interesting technologies and innovations in healthcare. And as a fund, we are super excited to kind of be here amongst all of what is happening here at the conference.
Healthcare is multidimensional, multidisciplinary. So what's in scope for you?
Yes, so a key thing for us is we're very thesis driven as a firm. Every year we sit back and we think about what are interesting trends in healthcare, what are interesting sectors that are spiking with talented people kind of glomming onto it and interesting market developments. And then we go and spend 3 to 6 months just learning about that space, meeting a lot of interesting people, and then starting to identify the appropriate stage startups that might be in our investment mandate.
Next 12 months, what are you going to focus on?
Yeah, well, let me start with where we have focused on, because I think that sets us up for where we're going to go next. When we first started the US outfit back in 2019, musculoskeletal, or MSK, was a big area of focus for us. We had seen through interesting proprietary claims data that MSK was an issue that was a big cost driver for employers and other payers alike. So we've spent some time, we made an investment in that space in a company called Peerwell, and we ultimately exited it to Bardavon Health Innovations. The next area that we found particularly interesting was in the PBM space. PBM is continuing to get more and more interest. Obviously, the Biden administration talking about it. Maybe there's some antitrust regulatory forces at work, but we've been a big believer in transparent PBM as well as medication guidance and navigation for that space. And we have a company invested there called With Me Health. More recently, we've been all over women's health. How can we not have an investment there? How can we not support that demographic and that particular movement? 2 investments, that we have done more recently. One is a company called Oath Care, which is really bringing back community to kind of that journey for a mother postpartum on the maternity and early childhood development cycle. And then the second is a company called Caraway Health. That is women's health, but particularly focused on women on college campuses. We all know from our university and college days how bad student health on campuses actually was, and this is providing both physical and mental health for those women on campuses. So those are some of the areas that we're interested kind of historically.
And for the next 12 months?
Yes. So right now we have active interest in a couple of areas. The first is the reimagination of the lab and the diagnostics market. I think the pandemic showed us whether it's vaccinations, whether it's testing, whether it's availability and access, that whole system kind of fell apart. So there's a lot of interesting companies that are bringing that at home, that are bringing it to kind of seniors and other folks who don't have readily available access and are having a hard time kind of doing the testing. So that's an area of focus for us right now. I think something also very similar for us is senior care and aging in place. And the core demographics of sandwich generation, people like you, like me, and everybody else that are kind of taking care of children as well as kind of their parents. There needs to be more technology brought to that, and we're really impressed with some of the stuff that's happening out there.
So to invest in all these areas, a VC firm needs a lot of money. We're in a recessionary environment where VC funding is down 50% compared to last year highs. So it's taking VC firms longer to raise less money. A little bit different for you because you've got OMERS Ventures as your anchor LP. When you think more broadly speaking from that LP perspective, what's some of the criteria or framework that they should be using to better discern, better evaluate where to deploy their capital?
Yeah, so we're super fortunate to be affiliated with OMERS. OMERS is a large pension fund out of Ontario, and it manages the pensions for over 500,000 municipal workers in the province of Ontario. So every day we get out of bed, we're very inspired to do the right thing and make sure they have a fruitful and productive retirement. To that end, they are our anchor LP. We have a smattering of smaller third-party LPs, but they are our guiding light, and they have a broad purview into multiple asset classes, all the activity that's going on in the capital markets, and we really learn a lot from kind of having them as a strategic partner. What I would say right now on the LP side, as it pertains to GPs and venture funds, is there's a shaking under the ground, right? This is like plate tectonics. And what you have seen through the first half of this year and all of last year, a flight to quality. LPs continue to deploy into the venture asset classes, but they're going with the names that have long been invested in. Maybe sandhill funds that have been around for decades and they're on fund double digits. You know, those are the beneficiaries, and it's just aggregating capital in the hands of fewer firms. For a while, over the last handful of years, the rise of what I would call emerging managers, including solo capitalists. So these could have been GPs that broke off from some of these mainline funds and started their own practices and raised small funds with the hopes of building new ones. You know, that's going to be a tougher market. I think a lot of the LP prognosticators have been saying emerging managers need to make the capital that they've raised in their last fund last. They need to produce results. We have a big dilemma in the markets right now. Realized versus unrealized markups and gains within venture portfolios. I think a lot of LPs have been kind of snake bitten. Oh, venture manager, you've shown me your portfolio's marked up, 10x on an unrealized basis, but by the time cash hits my door, that's far less than that. So again, a reconciliation is happening on the venture and the LP side, where LPs are giving their money to tried and true managers. And again, that is fine for OMERS Ventures, because selfishly, we have a big strategic partner who is backstopping us. But it means as a GP, we have to be a lot more thoughtful on who we syndicate deals with and who we co-invest with, because we're not necessarily sure they may be there for the future, and we also want to make sure they have dry powder to help, capitalize the projects we have done together going forward.
So when it comes to being thoughtful about the portfolio companies that you invest in, you've got a 20-plus year track record across 3 different venture funds, Atlas, Comcast, now OMERS. Take us a little bit into your pattern recognition, your algorithm in terms of where and why you invest in a founder and a company. What are the attributes, the metrics, the things that you look for that say, I'm going to make that bet?
So here's how I would answer that. The attributes are similar, but the real test of time and being fortunate to be in this business for a while is recognizing and appreciate when the macro tips. So, I started my career right after the .com. I saw the implosion of that. I was there in 08, 09 in the global financial crisis. And now between 2020 and the initial onslaught of the pandemic and 22 this year and how bad it's been, I think what, your kind of like older statesmen in the business can do is see the macro and quickly get portfolio companies and founders to turn the playbooks. The growth at all costs and the raise as much capital as you can and the blitzkrieg and the growth hacking, that is out of vogue right now, right? It's measured growth with an eye on profitability as the end goal and management of cash burn. That's why you've seen the best companies take their dose of medicine, do their riffs at the beginning of the years. It's the ones that don't have good stewards around the board who are just getting around to their first riffs now or trying to hold it off till next year. This is bad out there. There's just no way to kind of put it other than that. But if you are doing the right thing, you don't care about your valuation, you don't care about recapping, you're taking whatever money that allows you to continue to pursue your vision and your mission, you'll be okay. But you have to take those hard decisions, and hopefully you have a board and investor base that is supportive of you on that front. So I think that's the greatest thing that I can draw on, which is I've seen this tipping point, right? We're no longer in Kansas, right? Like, this is a new world order and we have to take action. And I think, again, the best boards and the best investors have been counseling their founders and their management teams to take these actions.
Michael, when it comes to leadership, in life, career, there are codes, norms, rules on how things are done. Where have you been a code breaker in business, career, life, and how did you do it?
Yeah, so I've been fortunate to kind of learn at the feet of many great leaders and managers over my time. And, upon joining OMERS Ventures, I had the opportunity to build a team from whole cloth. There was nobody in the US. I was employee number one, and therefore then had to go out and propagate a team over time. The thing that I really challenged myself, and I had taken learnings from others, is build a diverse team of diverse backgrounds, whereby the talents in the aggregate are the superpower and very complementary, as opposed to a series of individuals that can form the central casting. So as you and I have talked about in the past, I have people that come out of journalism, I have people that come out of market research, I have people that come out of academia, people that come out of operations. None of them conform to the Patagonia wearing finance tech bro, that you so often see kind of in this business. But they allow us as a team to really think about things, see things that I know I myself would not have been. And, I want to learn from my team. That's the number one thing I've learned in team building is, try to assemble a bunch of people where you can learn as opposed to you always teaching.
Michael, thank you so much for joining us.
Thank you, Chitra. Thank you for having me.